Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedge Lee with a daily update for the S&P 500 index. I want to start off with the cycles. So, when the cycles were renewing, the 5, 10, 20, and the 9-month cycle were renewing, I had shown this as lifting up, reaching towards the upper white trend. And I said it'll probably go up to the line and come back down. The reason is because we have now the second 5 week of the whole cycle coming up to the downturn right here where the mouse is, coming down on August 8th or 9th. Okay? And that'll come down probably until the 27th or so of August. Already, I had already pointed out that the 10-week is having a pull-down effect. Okay? And this 10 weeks pull-down effect right now is probably what's bringing down the price. And that 10-week effect will then be joined on August 8th or 9th or so by the 5-week where the 5 and the 10-week cycles will pull down the price. Now, whether the price will actually do this with one more gasp or not, I don't know. And it could be so that price touched the bottom, almost touched the top, and may touch the bottom again, the bottom white trend line. And that touching of the bottom white trend line could coincide by the pull down of the 5 and the 10 weeks. But I think that the 9-month is the dominant cycle, which is still very much on the up cycle, pulling price up probably until mid-November. Early November, at around the 6th to the 10th or so. There's a bit of a variance. And not only that, but the 20-week is also pulling up. And that means that I think that whatever decline we have should be pretty minimal. And most likely this gap, which probably has already been closed, was the target. However, there is one more gap here, and that's right here at around 27.63, this price gap where it jumped up, it gapped up. There is a potential so that now that this is closed, price can come down could continue coming down and close that gap and rise. Okay, and that closing of the gap could coincide from now until the early part of August, so that it declines into this. But that's not my primary. I believe that the 9-month and the 20-week pulling it up and still increasing in their momentum should have it so that the closing of the first gap sufficed, maybe a tiny bit lower down to 2,800 or so, and should go one more high to the touch and then come back down. So I think that's still my call, pretty much, not very much changed. And then there should be a renewed rise back in late August, so that what's likely also is we can get a renewed higher highs into this upcycle, and as all 3 cycles are pulling it down, have then the price, hold on one second, I got the time frames wrong here, one second, one more time. So that the time frame shows maybe an all-time new high hitting and then deep down in November. Okay? And what I'm trying to show here is couldn't see it because of this. One more time, sorry. The one increase and the decline should coincide with late August. Price should then continue rising up and then fall hard. There you go. That's what I wanted to show. Better to do it with one line. Sorry, it's a bit rough. I'm drawing a freehand, but it should convey the message. Everything moves to the right now. Because time has elapsed. Let me give one more go at this. There you go. Better to follow the line for the ABC. So what I'm trying to say is that we may actually see the execution of this big A, B, and a C. It may be probably an expanded flat where you get it A, B, C, A, B, C. That's why I'm saying even if this is a B wave, that'll generate a higher high, all-time new highs, somewhere, let's say, around 2940 or maybe 3,000 or so, let's say, and then this is still ABC. The C has to still be an impulsive five-wave division. However, the red C, this C, should fall pretty hard. And that's when a big sizable correction might take place. And usually, best time for that, late October, November time frame. And that's usually the weaker seasonality for the indexes. Okay, so that's the longer term perspective, updated, to see as to how that can jive with the Elliott wave and the correction ABC. Okay, once this C comes along, and if it executes, a lower low will be generated because an expanded flat needs a C to be lower than the low of the A. And falling 1,000 points or so would be pretty dramatic. The bears will come out again. So I guess what I'm also trying to say is anything above the all-time new highs, you might want to take some off the table, take some profits, raise some cash, and buy it back in. Well, when is the best time for hedging to buy back in? At the terminal ends of corrections. And this here will be the terminal end of the correction and a great time to ladder back in. Okay, that's the longer term with the cycles. The shorter term, again, here's that gap, the first gap that I believe is closed. A gap is closed when the price comes back down and reaches the starting point of that gap and all goes beyond it. That means the gap has been closed. Here's a second gap that could also potentially come down towards, and that's around the 2764. Price would have to go to 2764 or a little beyond it to close it and rise back up. But the updated scenario that I want to give you, I know that previously I had raised my forecast, calling for this to be 1, 2, 3, 4, and 5. Still there. I haven't really changed, but I wanted to give you an alternate to consider and be aware of. Why? Because awareness keeps the panic away. And the alternate here is looking at 5, this 5 as being here. That is the alternate. So we have 1, 2, 3, 4, and 5. If that's the case, then this clearly will likely close the gap on the second gap here. Whether this is these 5 waves or the subwaves of all bigger degree 1, 2, and a 3, 4, and 5 bigger higher highs, I don't know yet. But this needs to be considered. Okay. But I think if we're looking at the much higher degree yellow 1, 2. This is probably 1 of 3. We're looking at 2 of 3, maybe as maybe C. That'll do what? Close the gap right here, and that gap could be closed within a week or so. So this is 1, 2, 1 of 3, 2 of 3, 3 of 3 will be massive if this comes to correction. All right, I hope you found this to be helpful. I look forward to your comments. Have a wonderful day.